please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So the issue is that this gives the 2 years will give time to PWC to put their house in order, make systems connect.
Well, a process which PWC itself says that they've put checks and balances in place after the Satyam scam came to light. But let me bring my colleague Yash, who's of course been studying this order very carefully, to ask you one final question. Yash, go ahead.
Thank you, Mr. Gupta and Mr. Tandon, for joining us. This is Yash. My question to you is on the larger issue of consent application. If you look at PWC, it's of course an auditing company, it's an auditing consultancy. Here, do you think the route of consent application should be shut for institutions which come with a larger fiduciary duty, like exchanges, like auditing companies? Because of course they are responsible towards banks, they are responsible towards shareholders. Do you think consent application should be kept shut, that particular route should be kept shut for institutions like exchanges or auditing companies for that matter?
See, you are asking a very larger question, but I will respond. First of all, I am of the opinion that consent only has to be done in cases which are minor, which does not impact the system at large. And if you see the consent circular, it very clearly says that if there are issues or if there is a crime which has been committed, which has a market-wide repercussion, it will not be done. Now, in case of auditors, if it is a case of an individual auditor, there could be a situation. But if it is a case of auditors like PWC or any other big four, then the issue is that if you feel that the system across any audit organization is bad, then consent mechanism should not be there. That is one. And most of the time, the consent people go to avoid the lengthy legal process. And I would say that if the legal process itself is shortened, then consent will not be required. Because then either you're a bad man or you're a good man can be decided by the law very fast. So the issue is that cut down the time of process.
Okay. Amit, final say on that question to you?
Yeah, I agree with pretty much what Mr. Gupta said on this, but on the other, I kind of don't find myself in agreement with him. My view is that, look, if you're saying that they're not good enough to audit in 19 and 20, then how is it that they're good enough now? As an investor, do I have any confidence? So either SEBI is convinced that PWC is good, has the ability to audit, and which is why they're letting them audit in FY18. If they're not good enough for 19 and 20, how is it that they're good enough this year? So clearly that order is not consistent with itself.
Okay, so some agreement and some disagreement on this panel. Gentlemen, appreciate you joining us here to take us through what you make of SEBI's over 100-page order in the Satyam matter with respect to PWC. Arib, for now, it's back to you.
Right, Shireen. Thanks so much for taking us through that conversation. But moving on from there to the developments surrounding the UIDAI. So the authority has come out with measures to strengthen the privacy and security of the Aadhaar card holders. Now, the agency has introduced a virtual ID which can be used instead of an Aadhaar number. Now, secondly, the UIDAI has also introduced the concept of limited KYC. Sanket Upadhyay caught up with the CEO. Let's hear out what he had to say.
So the UIDAI has introduced certain new safety features. I wouldn't be wrong if I say that UIDAI in terms of safety has gone for an upgrade. Will this upgrade be able to assure people on their safety concerns? To discuss that and much more, I've got the CEO of Aadhaar, UIDAI, Dr. Ajay Bhushan Pandey. Dr. Pandey, thanks very much for speaking to us. I hope you will take all the questions, particularly regarding safety concerns. First of all, I want to know from you, what is virtual ID? Because, you know, initially when we got information about this, it was pretty hard to understand what exactly is this safety net that UIDAI has started. Because it appears as if there is one more layer of work that needs to be done by people.
You know, let me first explain to you, this virtual ID is like your camouflage Aadhaar number. Because if you are going somewhere and if you want to prove your identity, then you give your Aadhaar number and then you are asked to give either the biometrics or if you are entering into some online, you want to prove your identity online, then you enter Aadhaar number and then you get an OTP on your Aadhaar linked mobile number. So what used to happen is that there are many people who used to feel that their Aadhaar number I have maintained that it is not a secret information, it is a personally sensitive information, just like your mobile number or your bank account number. The question was that can we make this, even this personally sensitive information, which is not a secret information, even then can we make this, the further secure? And for that purpose, we have added one more layer on the Aadhaar, Aadhaar number itself. So, and on this, we were working for last 1.5 years. This whole concept is not that, it has come just overnight. We were working for the last 1.5 years. And this is the biggest innovation done since 2010, ever since we launched Aadhaar project. So this is after 2010.
So it's like an upgrade.
Complete. I mean, it's like a Aadhaar 2.0. This is the kind of feature that has come. So what will happen with the virtual ID is, let's say you have Aadhaar number, and you go to our portal, and you the first time you enter your Aadhaar number, and then because our portal, so we will maintain so what we will do is that on the portal you enter Aadhaar number, and then we'll send an OTP on your registered mobile, and then you can generate a 16-digit virtual ID number. Now that becomes your alias Aadhaar number. Now wherever, if you have to authenticate yourself either through your biometric or through the OTP or through your iris or whatever manner, there in place of Aadhaar number you can use your virtual ID, right? And then give your virtual ID, give your fingerprint, and then your authentication is done. So the agency which is requiring your authentication, for example, let's say you have gone to a telecom company for getting a SIM card, or if you have gone to a telecom company for verifying your mobile number, or if you have gone to a bank and you want to verify your bank account, then you don't have to give your Aadhaar number. You say that I have a virtual ID, and you give virtual ID and give your fingerprint, and Aadhaar system will know that this virtual ID belongs to this person. That is number one. One more thing that I would like to clarify, this virtual ID is changeable. You can change any number of times. I mean, let's say you generate a virtual ID and you use it, and then next hour...
How many times can I use one virtual ID?
First of all, any number of times till you change it. It's like, your password. The password is valid till you change this.
Okay. So this essentially, from how I understand, is that it's not a virtual number applicable to any one service, which means I can create one, use it to mask my original Aadhaar number as long as I want, and then I can change it also.
Exactly. And then one more, there is also one more very important thing that we have introduced in this one is that when you use virtual ID to use Aadhaar authentication, then the agency which is accepting your virtual ID, that agency today, he gets your eKYC information. And that eKYC information has the same information which is there on the Aadhaar card. Basically, he gets your electronic Aadhaar card. So what in this whole system, what we have done is that on the other end, that agency will get a different series of number, and it will be a much longer number and a string of characters in lieu of Aadhaar number.
What if the company tries to trace it back to whoever's Aadhaar has been used?
See, the company will not be able to trace this because the company will not get the Aadhaar number.
Okay, so they'll just have the 16-digit number.
No, yeah, they will have a 16-digit number, but the 16-digit number you will be changing, and then the UIDAI will send a response to that company saying that this particular person has authenticate, and here is the KYC information, that is the name, address and other details which are there on your Aadhaar number. But at this point of time, we are sending only the Aadhaar number. So what we will do is that the agencies also will not get Aadhaar number, except those agencies which are by law required to get Aadhaar number.
Earnings corner, all eyes on tech giant TCS. The IT bellwether's third quarter numbers are expected any moment now. Kritika Saxena joins us now from the TCS headquarters in Mumbai. Kritika, what are the key expectations?
Well, keep this in mind. The fact is that Q3, Q4 is a seasonally weak quarter. So we're not expecting fireworks from any of the IT giants this time around. It'll be fairly muted earnings across the board. But we are expecting some kind of pickup as far as commentary in IT budgets is concerned. So remember, January is the timeline when budgets are decided. There is a sense that in BFSI, North America, two areas that have been sluggish for most IT companies, including TCS, specifically BFSI, there could be some signs of back-ended recovery here. So that's something to watch out for. As far as the other concern area is concerned, it's retail. Now, retail, last time around, the CEO of the company had clearly said that as far as retail is concerned, they are expecting some pickup in the next few quarters. But again, Q3 for retail giants across the board is weak. So that will trickle in. So they have to retain consistency in the other businesses. To quickly take you through the numbers, in dollar terms, we are expecting a growth of about 0.9%. Constant currency is expected to come in 1.1%. Rupee terms growth is expected to be about 1.4%. PAT is expected to be fairly flat because we are expecting a lower other income and a higher tax outgo, which could impact the profits at this point. But as far as margins are concerned, the point to watch out for is if they retain their margin for 26 to 28%. They haven't come in that line yet. So if they give any kind of target for that, that will be important. And last time around, they had posted margins of about 25.1%. We are expecting a little bit of recovery there. They're not going to see any benefit of currency this time around, so that will be muted. But yes, there could be some benefit of margins not being included this time and operational efficiencies coming in. So as a result of that, you could see margins coming in at 25.1. But expectations are anywhere between 24.9 to even 26% as far as margins are concerned. If they reach that point, that will be important. Any other commentary as far as large deal outgo is concerned, as far as industrialization of digital, of when the large digital deals will actually start coming into the numbers, by when will they see double-digit digital growth will be important. Lots of important emphasis on commentary is going to be what we will be watching for. I'm at ground zero. In a little while from now, the numbers will be out, and of course, we'll be live with the press conference, and the management of the entire TCS team will be live on CNBC TV18.
The big exclusive from Deal Street. Now, earlier this week, we had told you about the market being abuzz about news that IDFC Bank and Capital First have initiated merger talks. Now, sources familiar with the developments tell CNBC TV18 that these negotiations may be in final stages. Nisha Podar joins us now with all the exclusive details from there. Nisha, how soon can we expect the deal to come to fruition?
So this will be the second attempt by IDFC Bank to really grow its retail portfolio through an inorganic route. Sources with direct knowledge share with CNBC TV18 that IDFC Bank is indeed in discussions with Capital First for a merger. And remember that this is going to be a large transaction and which could be in the final stages. Sources do also share that any announcement on the merger could be expected in the next few days if both the boards really agree for the merger. Now, we also gather that if this merger were to go through, V. Vaidyanathan, who is the executive chairman of Capital First, is the one who could be leading the entire merged entity, which is bank with Capital First as the NBFC merged into it. Now, we also gather that, remember that Capital First's marquee private equity owner with 35% stake, Warburg Pincus, has been looking at a strategic deal so that it can monetize its stake into the company. So that has been going on, and IDFC Bank, remember, had been also looking at an inorganic growth. And the talks between the two companies really started when the troubles really erupted last year while IDFC was looking at a merger with Shriram. So these deal talks are really at an advanced stage is what we gather. But of course, shareholders' permission who remember were unhappy with IDFC's earlier attempt of a merger will play a crucial role. So the valuations would be very, very critical.
Right, so the boards may meet in the next few days. Thanks, Nisha, for joining us with the exclusive details from there. But moving on to the fixed income money market, where the Derivatives Association of India has announced around noon today that it has put out revised year-end prices on a bunch of bonds on the RBI's instruction. Now, most of the revised prices were lower than the actual last traded price of these bonds. As a result, immediately bond yields fell. But more importantly, banks are going to see their third quarter treasury earnings get impacted. Lata is here with all the details from there. Lata, can you explain how this move is hurting bond yields and how it may have a trickle-down effect to bank earnings?
Well, actually, this is something which hit like a thunderbolt. Today around noon, the FIMDA suddenly put out a revised list of year-end prices. That is 2017, December 29th, last traded price of a series of government bonds. This is normally announced by FIMDA, the Fixed Income and Money Market Dealers Association, because that is the SRO, the organization representing money market dealers. But the instruction clearly said, as per RBI instruction, and most of the, not all the prices were revised lower, but most of them were revised by about 1 rupee to about 60 paise lower. So the yields were higher by 8 to about 14 basis points. Fortunately for the banks, the benchmark bond, the 10-year bond was not touched. Now I say fortunately because that is the biggest holding that banks normally have in their trading portfolio. There are illiquid bonds, you know, the 11-year bond, the 12-year bond also, which are fairly liquid and which are there in their held-to-maturity portfolio. All those have been priced lower. The analysis which the traders give you is that it is typical at the end of every quarter and year that banks or traders jack up the prices in the last 5 minutes of the last day of the quarter, so that when the mark-to-market is done of the available for sale holdings, the prices are not very bad. You know, either they make actual gain or the losses are lower. So this time around, the Reserve Bank probably wanted to put an end to this practice. They probably cancelled the last 5 minutes and took an average of the last half hour or whatever. There's some formula that they have followed and they gave revised prices. So as a result, banks are going to find their treasury revenue for the third quarter slightly lower than it would have been otherwise.
Exclusive from the electric vehicle space, sources are telling CNBC TV18 that Maharashtra is preparing a blueprint to promote electric vehicles in the state. The policy is expected to be unveiled next month. Utkarsh Chaturvedi joins us with all the details from there. Utkarsh, so what should we expect from this policy going forward?
So, Arif, it is by February, the first week of February, that we can expect the policy to be rolled out. Now, the whole policy is being made on 3 basic parameters. Now, the first one is about the installation of charging infrastructure. So, the idea is to give basic infrastructure for electric vehicles. Now, for that, what the government is really planning to do is to tie up with private players and facilitate them to set up in charging points either at the airports, railway stations, main city centers in places of Mumbai, Nashik, Nagpur, Pune. So this is one part of it, setting up the basic infrastructure. Second one is to encourage investments in the electric vehicle space. Now, for that, what the government is really looking at is refunds in SGST, either to the auto component manufacturers or to the complete electric vehicle manufacturers. So this is the second point which the government is really focusing on. And the third one here is to facilitate the buyer. What they're looking at is to decrease the taxes on electric vehicles so that discounts on electric vehicles come and EVs don't remain so expensive the way they are. Now, this is the second state which is really working on the policy. Karnataka has already come out with the policy. The policy, somewhere both the policies are of the same nature. But what they're looking at this point of time is that both the state governments, in fact, state governments across the country, are really looking at huge sums of investment in the EV space. Remember this, Arif, that in the auto component space, there's not a single player who has a lot of expertise in the EV space. And especially, companies across the border in China have been waiting to invest in this market. All of them are waiting for one thing, which is the EV policy from the MORTH to come, and then clarity from the states. So obviously the race to really, get the electric vehicle investment in the state has begun. Karnataka was the first one. Now there's Maharashtra about to come with the new EV policy.
If you live in Karnataka, your taxi rides are likely to get expensive soon. In a new notification by the state's transport department, the government has introduced new rates for taxis in the state. Rukmini Rao joins us now with all the details. Rukmini, what's the price ceiling for various categories now?
Well, the Karnataka State Transport Department has brought out a new notification notifying new fare slabs for cabs in Karnataka. Now, earlier there were just distinction of a AC and a non-AC cab, but now the State Transport Department has categorized all the fares depending on what car you'll be picking. In fact, it is all dependent on the price of the car. Essentially, there are four categories, D being the lowest, where the price of the car is anywhere between 1 to 5 lakhs, and you'd be paying about 44 rupees for the first 4 kilometers that you take a ride, and after that for every kilometer you can be charged anywhere between 11 to 22. And category A being the highest category of cars over 16 lakhs and above, you'd be paying a minimum of 80 rupees, and after that you'd be paying anywhere between 20 to 45 rupees. Essentially what this means is the minimum and the maximum fare that has been fixed essentially lets all the cab aggregators really manipulate during the price surge and look at almost 100% price surge between the minimum and the maximum. Also, there has been a clarification that has been issued where cab aggregators will now pay the toll but will be collecting the toll money from you. And since this is applicable to all the urban areas in Karnataka, people living in Mangalore, Hubli, Mysore and we Bangaloreans will be paying a lot more than what we used to pay for all our taxi rides going forward. Back to you.